Hey guys, in this video, we are going to take a look at how 6 of the stocks that I mentioned in my Facebook group, alright, and let's take a look at what the result is, alright, after I announce to my Facebook group members to buy at a certain point of price, alright. So let's take a look at Apple, alright, AAPL. And before that, if you haven't joined my Facebook group yet, alright, do join it at the description link below, alright, where I will share from time to time. I'll even do a live session video to analyze the stocks on that particular day, alright, and my analysis upon that, alright. And I also give you a free ebook guide, alright, how to become more profitable in your investings, alright, and in eToro as well, alright. Alright, let's jump into it. Alright, the first stock, let's take a look. And I mentioned in my Facebook group is that I looking to buy, alright, at Apple once the price breaks over 388.51. Let's take a look. AAPL. Alright, by the way, the chart I'm using is TradingView. Alright, if you don't know that. And the right hand side of this is the live I've did and the recommendations points to buy. Alright, let's take a look. Alright, I recommend everyone to buy when the price is over 388.51, which is around this black area. Let me make it much thinner. Alright, I recommend it to buy at this area. So let's zoom in. Alright, as you can see, the reason that I recommend it to buy because I myself is a trend trader and I look more on the trend of the charts rather than the value of the charts, value of the stocks, because I believe that for us to make profits in the stock markets, we need to how do you say that? We need the price to move from point A to point B. All right. If you just merely focus on the value of a company, all right, the stock might go downwards. All right, means the price go lesser and lesser. All right, you will end up losing money. All right, no doubt that you will be earning money. All right, in 5 to 10 years, but that is no guarantee. All right. What I've used is no guarantee as well, all right? But the majority of the time that we follow the trend of the markets, we will end up, all right, in the same trend as the market, all right? As you can see, in this case, it's the same, all right? We follow the trend of the markets, we make money, all right? We entered at 388.51. Let's move that up a bit. That's too much. 388.51. All right, 388.50. All right, let's zoom in. As you can see, when we entered here, all right, our risk should be at this area. All right, so for this, our risk to reward currently is, let me move that a bit, no. Alright, as you can see, the risk reward here is nearly 0.9. Alright, so alright, as you can see here, the risk reward is nearly 1, alright? So when you buy at 388.51, as I stated here on the Facebook group, end up you write the stock up to 393.49, alright? Look closely at my predictions, alright? I tell everyone to buy after the price went over 388.51, alright? I don't just enter into the markets. All right, I wanted the market price to prove that my point is correct. All right, if not, I'm not going to go into the trade. Why? Because the price might open lower. All right, and it doesn't have the momentum for it to push it up. All right, and I won't want to lose my money that way. That is a very, very poor way, all right, to execute your trade in the stock markets. So let's take a look at the next one, CMCSA, which is Comcast. Let's take a look. I recommend the price to buy over is 42.36. All right. As you can see yesterday, the price went lower. All right. It doesn't went up any further than 42.36. All right, which is at this price. Let me draw a line there. 42.36. All right, around that area. As you can see, the price doesn't breaks over that area. All right, therefore we didn't enter into any trade. Therefore, we didn't have losing trade as well. If yesterday I was to ask you to buy, all right, at the market level, all right, which is around this level, 42.17, you would be losing money. All right, I would be losing money as well. All right, so this is a very important lesson. All right, which is to let the market prove us right. You don't want to go into the market to show the market that you are the right one. All right. I was taught to be humble, all right? If you don't know my story, I've started out around 10 years ago, all right? I jumped into a value stock, all right, hoping to earn money, but the market, all right, the price of the market, all right, do what they does best, all right, is they trend well, all right? Doesn't care if it's earning money for you, if it's losing money for you. Doesn't care if the company is making money or losing money, all right? As long as the majority of the people thinks that the market is not going to make it, all right, they will start to sell. And no matter how good the company is, all right, even Apple, all right, even Comcast, the stock price of the market will go down, all right? What you want to do is to follow the majority of the people, all right? The big banks, all right, the big hedge funds, all right, when they put money into it, you want to follow them, not against them. Think about you are like a fish, all right, that stick closely to a whale, all right. If you don't know the big whale, all right, the big blue whale, all right, a lot of fish, all right, will stick around them. The reason why the little fish sticks to the big whale is they will find food easily, all right, without any resistance, I would say, all right. So go with the trend, avoid the resistance in the markets, and ultimately, all right, if you do that correctly in the long term, you will eventually make money. So let's take a look at the next one, MACD. Okay. All right, I recommend it to buy once the price break out 191.98. All right, 191.98. Let's take a look. 191.98. All right, as you can see, we enter. All right, and we lose some money as well. All right, but I am still looking good at this chart. All right, let me tell you why. Because this is what we call the triangle pattern. All right, the price tries to break out. All right, broken out, but then we trace it back. All right, until this level. All right, most probably the price will go upwards or downwards. All right, so if you have entered into this trade, for me, what I would do is I was still holding on, all right, until it broke down this level to 189.45. All right, And as you can see, this is the daily chart, right? These two black lines is what we call the chart, the channeling pattern. All right. What it does is that it actually limit the price around this area. All right. So you can see the up, down, up, down. Now at the down level, all right, looking to break out. All right. As you can see for the past few charts, all right, we have also have this chart pattern. Let me show you back there. As you can see here, all right, this is just one line. Let me draw another line so it shows clearly for you. Now, do you see that? It's a channeling pattern, all right? What that means is the price will contain around this area and keep bouncing up and down, all right? So we look to buy at this area, pullback area, which we did for yesterday trade, all right? And looking to profit up. This is the last chart. This is Comcast, okay? You've seen this chart before, all right? But what I want to show you again is the pattern, okay? You can see this pattern showing up again, and again, all right? In Apple, McDonald's, all right? It's the same thing, all right? What you need to do in trading or investing is that you only need a good strategy, all right? You don't need to have a lot of strategy but works poorly or doesn't produce I would say, great results, all right? We want strategy that produce great results, all right? No matter, we want the quality of the trades, not the quantity of the trades, all right? Let's take a look at the following one, which is Facebook. All right, and to say again, all right, I'm not a financial advisor. I use my own experience, trade my own accounts for nearly 10 years. But the reason I'm doing this is to show more beginners, all right, to how to trade, because I really hope that someone would help me this way, all right? And I would hope that a lot of people will make the mistakes that I've made and learn from my mistakes, and let's grow together, all right? This is my passion, hopefully yours as well, all right? Yeah, let's take a look at Facebook. I've recommended to buy over 244.25, all right? 244.25 would be at 244.25. Let's take a look. $244.25. Yep, around this area. So we have made a little bit of money, all right? And the reason why I've picked this stock to enter, all right, over this price is because, all right, as you can see, all right, let's take a look at the big picture. It's the same, all right. It's an uptrend as well, all right. It respects this upward trend, all right. And as you can see, the candle before that is a bullish pin bar, all right, which means that a lot of people are looking to buy, all right. When the price go down here, all right, they wanted to buy and the price form this candle, all right, this type of candle, all right. And this is what we look for the momentum trade to work, all right. And this trade, the momentum works in our favor, and we look for it to break up, all right, higher. All right, let's take a look at the next one, which is Starbucks. That's the last two stock that we look to go into. All right. All right. Starbucks, I've recommended to buy once the price break over 74.48. All right, let's take a look at 74.48 around this area. Let's make it more accurate, 40.4847. All right, that's good enough. All right, as you can see, I've recommended everyone to buy at this price. All right, at this black line here. All right, why? Let's take a look. The reason I recommended to buy is the same as the last one. All right, the last few one is an uptrend. This one is what we call a range. All right, in this range market, all right, you can see that the price is contained around this area. All right, and it moved horizontally. All right, so the price bounce, and here is looking to go upwards. All right, so that's the reason why I recommend to buy. And because at this area, it's near the support area, which means that our support, our risk to reward is more favorable. Let's take a look. Here's our risk point. Here is our reward point. All right, let's take a look. All right, we have entered yesterday here. Okay. Let's take a look. The risk to reward is 2.48, which is very, very good. All right. So, in fact, if you are more, you can tolerate more risk. All right. I will suggest the risk to put at this area. All right. Why? Because this is the entry that we enter into. All right. If it works, it will work very well. All right. If not, you will lose so much. Get it? So if you put your stop loss at this area, we got 5.28 risk reward. All right. That is very, very good. All right. You can take 10 trades and you only take 2 of these. All right, 2 of these trades, which mean 10%, and the other 8 losing trades, which is 8%, you still earn 2%. All right, at the end of the day. So this is a very favorable one. So let's take a look at Microsoft. All right. This one is very, very strong. All right, let's take a look on why we suggest to enter at 205.32. The price which I asked to tell everyone to enter is 205.32. 205.3232323235. It's okay. All right, let's take a look. The price is in a long-term uptrend, all right, since April, all right. This is the same pattern as well, guys. This is a channeling pattern, all right, and this is the same candlestick as well. Bullish candlestick, all right, bullish pin bar, and as you can see here at my Facebook group, all right, which is eToro discussion group. All right, you can search it by eToro discussion by Wealth Creation International, or you can click on the link below to join this group. All right, and if you're already in this group, I want to welcome you again. All right, stay tuned. We are going to do more this type of live video. All right, but make sure you tune into it because I will get into the live video around 9:10. All right, of US time, 20 minutes before the US markets open. All right. After we analyze it, we go through the markets together, and then we do again the analysis of the decision we made earlier. All right. All right. We have looked to buy into the stock 205.32. All right, and this is how the price goes. All right. It goes to 211.6, all right, per share. Let's take a look at the risk reward. And I've entered into this trade as well, all right. So you can see the risk we are going to put at this area. Currently, the risk reward generated around, hold on. All right, currently, Currently, the risk reward is 1.46, all right, which is not bad, I would say, all right. And I will look for the price to go up until 215.94, all right. I will take part of my profits out, all right. The risk reward here is 2.46, okay, 2.46, which is very good as well, all right. And if you can hold longer, all right, the price I would forecast it to be around this area, all right, 4.04, 4.04, all right. Why I would take profit at this area? Let's take a look. All right, you can see that the chart goes up, all right, goes up, all right. It doesn't go all the way up, all right. It goes halfway up and then down, up again, down, and then up again, all right. You can see stock market doesn't move in a straight fashion, all right. It goes into a stair steps fashion, all right, up, down, up, down, up, down. That's how the stock market works, okay. So remember this, take your profit, all right. If you are afraid, all right, that the profit will evaporate, or you can't sleep at night, all right, that is a very bad sign, all right, that you can't, that you have to take a profit fast, all right. And what we aim to do is that we aim to get either high risk reward, all right, or we tend to have high win rate, all right. It's easier, all right, for human being, all right, psychologically to get a higher win rate, all right, and smaller profits. But if you can get smaller win rate, all right, which a lot of people, including professional hedge funds, their win rate is around 50 to 60%, all right. What they aim to do is risk reward, to have higher risk reward. Okay, you can read the book called by Anthony Robbins, Money Master the Game, I think, where he interviewed a lot of professional hedge funds, all right, founder such as Ray Dalio, all right, one of the most successful hedge fund that managed by the funds that they manage, all right, meaning that he is one of the